Founded in 1974 by Mr. John Barbuto, JB Hi-Fi started in Melbourne's very own East Keilor. Now, it's a publicly listed company.
Alex, please explain the primary activities of JB Hi-Fi.
According to JB Hi-Fi 2018, JB Hi-Fi focuses on technology and consumer electronics, whilst The Good Guys mainly focuses on home appliances and consumer electronics.
Can you also discuss their financial and social performance?
I'll start with the financial performance. Section 292 of the Corporations Act requires JB Hi-Fi to prepare a financial report for each financial year. Section 295 of the Corporations Act also requires the report to consist of financial statements for the year, notes to the financial statements, and a director's declaration about the financial statements and notes. Section 296 of the Corporations Act requires these financial statements to comply with 1. The accounting standards issued by Australian Accounting Standards Board, AASB, and regulations. AASB 1048 requires financial reporting to comply with AASB interpretations, and AASB 101, the presentation of financial statements, which states that these financial statements must be presented including items such as the profit and loss statement. In summary, when comparing the financial year of 2017 and 2018, JB Hi-Fi Limited 2018 states that their gross profit is up 21.8%, they had a decrease in company assets by 1.6%, they had a favourable decrease in total liabilities to 3.75%, demonstrating a reduction in their debt. JB Hi-Fi is a profitable business with their profit figures displaying an increase over each financial year. Their earnings before income and tax increased by 14.5%, also demonstrating that the entity is in a desirable financial position. I will now discuss the social performance. It is common for entities to report on their social performance, although entities are not required to do so in Australia. Reporting on social performance is largely voluntary and mostly unregulated. JB Hi-Fi has included an analysis of their social performance in both financial years 2017 and 2018. JB Hi-Fi implement a range of programs each year to ensure that they are actively giving back to the community. One of these programs is called Helping Hands. Established in 2008, Helping Hands involves JB Hi-Fi directors, executives and employees being given the opportunity to donate to the registered charitable organisations. JB Hi-Fi then matches these regular employee contributions dollar for dollar. For the financial year of 2017, over 5,800 JB Hi-Fi Australian employees made weekly contributions to Helping Hands. In total, $2.1 million was raised in the financial year. For the financial year of 2017, over 5,000 JB Hi-Fi Australian employees made weekly contributions to Helping Hands Australia. In total, $2.1 million was raised in the financial year. However, JB Hi-Fi Limited 2018 stated that in the financial year of 2018, over 6,200 JB Hi-Fi Australian employees made weekly contributions, raising a total of $2.4 million. This demonstrates that JB Hi-Fi experienced a favourable increase in the relation to the overall amount raised. According to JB Hi-Fi 2018, in the financial year of 2017, 280 New Zealand JB Hi-Fi employees also made weekly contributions. This raised a total of $88,000. However, in the financial year of 2018, the same amount of employees, 280, also contributed to the Helping Hands program. This raised a total of $94,000, which was a small increase from the previous financial year. Change for Change is another program that reflects the dedication that JB Hi-Fi show in regards to giving back to the community. Change for Change involves donation boxes being placed on the sales counters across the stores in Australia and New Zealand, which encourages customers to contribute. According to JB Hi-Fi Limited 2017, the financial year of 2017, a total of $54,000 had been collected in Australian stores and approximately $27,000 had been collected in New Zealand stores. However, in the financial year of 2018, these donation boxes within Australia saw a small decrease of $3,000, obtaining a total of $51,000. In New Zealand stores, approximately $31,000 had also been raised, which was a small increase in comparison to the previous year. These two programs demonstrate the great efforts that JB Hi-Fi go to ensure that their business is contributing to society in a positive way. Rahnee, could you please compare the statement of profit and loss and other comprehensive income for both financial years, please?
The profit for the year 2017 was $172.4 million compared to $233.2 million in 2018. For the full picture of earnings from operations, we can use the total income along with the profit loss and comprehensive income report of both years. Before we start to compare in detail, it is good to note that the comprehensive income in JB Hi-Fi's report is net of tax. Let's look at the obvious points. Their sales have drastically improved from $5.6 billion to $6.8 billion in 2018. This shows that the company has really pushed revenue and wasn't a reduction in cost for the jump in comprehensive income. Cost of sales has remained relative to its actual sales for both years, meaning the company has managed to sell more but still having relative cost of goods sold. All the expense accounts from 2017 to 2018 has increased except for one account. The main accounts with the biggest differences are in the occupancy expenses, sales and marketing expenses, and acquisition, transaction, and implementation expense. All the expenses have increased except for the item acquisition, transaction, and implementation expense, in which 2018 had no figure but 2017 has of 22.4 million. However, in all, despite more costs in operating, JBFI has managed to gain more sales. 1.2 billion increase, although 2018 has more costs in terms of numerical value. In relation or in ratio to revenue, there is a smaller expense to revenue ratio with 2018 than to 2017, with a difference of 0.36% with all the expenses. So the nature of the difference seems to be more because of the company's ability to sell more items for the year, more so than having more or less expenses. Because even though 2018 has improved the ratio of expenses to revenue slightly, it has still almost remained the same. So if the expenses to revenue ratio remain the same in order to overall gain more profit, there would have to be more overall sales despite expenses increasing at the same rate for both years for the companies to be earning more profit. The difference is due to that and how the company in 2018 managed to get lower cost to sales ratio than 2017, even if it is minuscule. Helping this is the non-recurring event in 2017, an extra expense shown as acquisition, transaction, and implementation expense, which increased 2017's cost of sales ratio and other income account, which has increased 2018's profit and has a difference with 2017 by 239.7 million. In the article from ABC, it says the profit has risen and it states the profit is driven by consumer electronics and home appliances sales. So that shows evidence that the rise in profit is by marketing and rather not cost management. Take note, sales and marketing has, out of all the items, the most cost in expense and has the most difference compared to 2017's period, with a difference of 115 million. This might have had the biggest impact in the income statement to boost revenue, which is the biggest factor to play when looking at profit. So the difference in profit is due to recurring event of operations and the company's focus on marketing and sales to improve overall sales in 2018 compared to 2017. So in conclusion, the comprehensive income of JB Hi-Fi has increased from 2017 to 2018 by a drastic amount because of mostly sales and other income accounts. Tell me about the lease agreements of JB Hi-Fi, and can you please discuss how the new accounting standard will impact assets, liabilities, and profit of your company?
A lease is defined as a contract or part of a contract that conveys the right to use of an asset for a period of time in exchange for consideration. AASB 117 had several issues. Firstly, the many leases were not represented on the entity's balance sheets. The second is that the accounting models failed to meet the needs of users' financial statements. And lastly, the requirements of recognitions of leases were too complicated. AASB 116 also has improvements as there is a reduced complexity of application. Under AASB 117, any forms of leasing activities were classified as operating leases on the income statement as an expense on a regular basis over the span of the lease. These leases were, however, not presented on the balance sheet. As of 1st January 2019, under AASB 116, all leases that run for a duration of longer than 12 months and are not of low value will be recorded in the balance sheet. There will be two inclusions on the balance sheet, including non-current asset, which is the right of use asset, the lease liability, current and non-current. Furthermore, the income statement will record the lease expense as a depreciation as opposed to an operating expense. This means that for JB Hi-Fi, the new AASB 116 standard will affect its annual balance sheet in various ways. As of the financial year ending 30th June 2018, the group has over 526.9 million in leases payable with a duration longer than 12 months. Firstly, the new standard will change the profile of the expense. Rather than being a straight line rental expense, there will be more expense in early years and less in later years, impacting earning profiles. Their balance sheet will then include large amounts of non-current asset and the cost of the use of the lease assets, which are both current and non-current. Change in profit, which is caused by depreciation expense as well. From 1st January 2019, JB Hi-Fi will have a large balance sheet change, which will need to be explained to investors, financiers, and shareholders.
So Alex, tell me about the PPE of JB Hi-Fi and how they are valued.
Thanks, Rahnee. Now looking at JB Hi-Fi's property, plant and equipment details, JB Hi-Fi has 311 stores, Australia and New Zealand wide. This includes PPE in stores from 2016 when there was an acquisition of The Good Guys. JB Hi-Fi follows the AASB 116 definition for PPE, where PPE is defined as tangible items that are A, held for use in the production or supply of goods and services, for rental to others or for administration purposes, and B, are expected to be used during more than one period. Knowing this, we looked at JB's balance sheets for the years 2017 and 2018. Because JB is a retail business with many brick and mortar store locations, it has a substantial PPE footprint in its annual reports, having 198 million in plant and equipment assets at the end of 2018 and 208 million at the 2017. It should be noted that JB rents its store locations to improve flexibility against market changes. Therefore, land assets do not exist in JB Hi-Fi's balance sheets. As quoted from JB's annual reports, PPE is recorded at historical cost, less accumulated depreciation and impairment. This includes leasehold improvements made on JB's rented properties. In addition, certain classes of PPE are recorded at fair value if it is established that those classes of PPE can be reliably measured at fair value as required by AASB 116. Examples of these classes could be machinery and office equipment. Items within these classes are also recorded simultaneously so to avoid selective revaluation of assets. As most of JB's PPE is recorded at cost, JB believes the cost method provides a true and fair representation of their assets. For example, JB cannot value leasehold improvements at their fair value because these property improvements are only going to be relevant to JB stores. Otherwise, classes of PPE are recorded at fair value and are measured using the revaluation model. The revaluation model provides a true and fair representation of assets by revaluing assets at their fair value on a given date, less accumulated depreciation and impairment loss. These valuations must be made regularly to ensure the accuracy of the valuations. Also, this method is preferred as it would give JB accurate information on the value of their assets if they had to liquidate them.